Hello and welcome to Magicbricks Now. You are watching Property Hotline with me, Kavita Krishnan, and we are answering all your questions related to home finance. Our special guest for the evening is Kartik Jhaveri. Kartik is the founder and director of Transcend Consulting India Private Limited. Kartik, welcome.
Thank you.
Let's get started. We have a question that's come in on Facebook. Kriti says that she's paying an EMI of 25,000 rupees on her home loan since the last 2 years. Now, she can afford to shell out another 5,000 rupees a month for this loan. Should she increase her EMI to 30,000 rupees, or should she do a part prepayment of 5,000 rupees towards the outstanding principal every month? Which option is more cost effective? You know, I like the way she's taking charge of her home loan over here. What should she do?
Kriti, it's very interesting. What's going to happen is now the two options that you're playing with, prepayment of 5,000 every month or increasing your EMI by 5,000. But guess what? The effect is pretty much the same thing. So, because the interest that you're going to be charged as a part of that 25,000 EMI that you're paying is going to be the same, because the loan that you've taken is the same. It's falling at the same outstanding principal rate.
So essentially what you're saying, Kartik, over here is that it doesn't make a difference whether she is, actually paying towards the principal, or whether she just goes to the bank and says, increase my EMI by 5,000 rupees. Why is that the case? Could you break it up for us?
No, so what happens is, when you are actually making a prepayment of that principal, it is as good as saying that you are paying that additional 5,000 every month. So what's happening out of your 25,000 is a portion of that, or a large portion of that, is paying your interest. Now that will stay as it is. Now whether your principal gets reduced by this additional 5,000 or as a composite 30,000, the amount of principal that is going to be repaid more is going to be 5,000 only. So mathematically, whichever way you look at it, both these options are essentially the same. However, my opinion is a little different from this. My suggestion would be for you is that don't do either of these. Neither increase your EMI, neither go in for this prepayment, because you understand home loans, and when you're paying back the capital of the home loan, is like a one-way street. You pay the money and that's the end of the story. You don't get anything back. But how do you have a better bang of your buck? Instead of doing this, start an SIP of 5,000. Start investing that money. Get your money to work for you even better. Over a couple of years, you will have profits that will start accruing. Pick up those profits and then make your prepayments. The effect again on a net basis will be the similar, because your principal will start getting repaid faster as you make prepayments, obviously. But at the same time, you will have your capital intact, which means these 5,000 rupees which were otherwise going to go into your home loan will stand as an additional asset for you. So you're creating multiple assets. So that is a much smarter and a saner thing to do, is to use those profits for making these prepayments.
And in fact, that is Kartik's favorite piece of advice for everyone. Do not break one asset to create another. In fact, it's better if you can build two assets at the same time.
Indeed.
Aarti Sethi tweets in our next query. Now, she wants to know what is a CIBIL score. She also wants to know how important it is while availing a home loan. She also wants to know how to improve her credit score. Well, Aarti, I can tell you this, for the bank, it is very, very, very important, and which is why it is essential that you maintain a good credit score. Kartik, we're getting a lot of questions on this.
That's right.
What is a good credit score? I mean, of course, what is a credit score, and what is a good credit score?
So a credit score is like a number ranging between 0 and 1,000, which is assessing, or which is telling the outside world how credit worthy you are, or how respectable you are, or how valuable you are, or how much you will be sort of committed to any loan that you will take, and
whether
how
or not you
worthy.
pay your EMIs on time.
Yeah, how loan worthy are you? Are you somebody who's responsible enough to be given my money, or an external person's money, as in the bank saying my money, and will you pay back this money on time? That's the most important thing. So they want to check your character, your attitude, your discipline, your methodology, and all of that. So it becomes a very important number. Now, to be able to get a red carpet treatment in terms of getting a loan, whether it's a car loan, or whether it's a home loan, or a personal loan, or whatever, or maybe even a credit card with a 5 lakh credit limit, a fantastic score to have is something in the excess of 850, or maybe towards 900. That is an absolutely brilliant score to have. However, credit worthiness improves once you cross 700, which means to say, in other words, if you're below 700, obviously, most institutions don't want to do business with you. Now, so therefore that, pretty much explains why it is important. Now, how you should make sure that, if it's down, it comes up, and if it's at whatever level it's maintained, pay everything on time, whether it's your EMI, whether it's your credit card bills, any expenditure that you're doing, as long as it's paid on time. The loans that you take, if you keep taking a lot of loans, again, your score suffers adversely, because then it shows that you are trying to have a slightly loan-hungry behavior, which means you're taking a lot of loans. Maybe you'll not be able to digest it. So essentially, fiscal discipline, paying everything on time, especially your financial transactions, if they are okay, it's great. Even if you have a score which is, say, 900 or 700, but you've not taken any loan, could also be a question mark, saying that the person has never taken a loan. So you use a credit card. It's a fantastic way. You get your points and all, and that way you build a brilliant credit history as well. So take a small credit card if you're like a little worried about, splurging too much. Maybe 25,000, 50,000 limit, spend a little bit on that and pay on time. That will build up a brilliant history. I mean, at least that'll be a great starting point.
Now say, my counter question to this, Kartik, now say that, sometime when in my young, ignorant adulthood, I have a credit card, I've spent money, I've not paid on time. And this is probably like 10 years in my past. Will that affect my CIBIL score? And if it does, how do I rectify it?
The experience says that it's unfortunately yes. So which means even if you did something back 10 years ago, it's really dependent on the person who's sitting at the desk and the rules that his institution has given him to follow or given her to follow. So sometimes they seem to be completely archaic and they seem to be ridiculous. Something that I did 10 years ago, why should it make a difference now? But what is happening is 10 years ago, let's say you were delayed by 60 days. It will show on your record that you were delayed by 60 days. It could have been a genuine mistake. It could have been a mistake that, something so genuine, like you actually went to the bank and deposited the check, but some guy who was to pick up the check made a mistake and he didn't pick up your check on time. And as a result of which you had to suffer. Even genuine things like this. CIBIL unfortunately is like a one-way street. You can only be, harassed, but you cannot have any redressal, which is a really sad thing in today's day and age. There is just no redressal mechanism, and there is nobody who really wants to take ownership and says, okay, I'm here to help you if you have a problem with CIBIL. So that's really unfortunate, but then that's how it is. Then that's how the state of affairs are.
So what you're essentially saying is, if you're stuck with a bad score, you're stuck with a bad score.
You're not stuck with a bad score. The score will improve because over a period of time, as long as you maintain your financial discipline, the score will improve. But that black mark will not go away. And, unfortunately, nobody wants to ignore that. I mean, it's ridiculous. They might reject a 20 lakh loan for something that happened worth 200 rupees and that happened, 10 or 15 years ago. But who do you speak to? There is no person to speak to. It just seems like a robot,
So that's the unfortunate,
very unfortunate
truth of the CIBIL score. So ensure that you pay your bills, all your bills, especially your credit card bills, on time. Email query coming in. Vivek says that he wants to take a home loan for investment purpose. Position is expected post 3 years. He wants to know if the EMI begins from the first day of availing the loan. Can he opt for a pre-EMI option? Of course, the EMI begins, the clock starts ticking the day you get the loan, right?
Indeed, absolutely. And our advice has always been that, why would you want to only pay the pre-EMI? Because then in that case, you're only paying the interest. If you can afford it, if your cash flows are supporting you, and if you don't have too much of a trouble with respect to your investments and your other financial commitments, then by all means, start your EMI straight away. In fact, you'll be in a double advantage by doing that. One, your interest is anyways getting paid. Second, the demand is not there on you to pay any principal. But if you already start paying off your principal, what happens is the total interest that you will pay over the entire tenure of the loan will be dramatically lower. So when you sit with a consultant to sit out or you even ask the bank for the amortization sheet and you start paying your full installment, you'll be amazed at how many lakhs of rupees you'll save in interest costs. It's a brilliant thing to do. Start your EMI the day you take a loan. Even if you've just taken 5% loan out of your total total sanctioned amount, just start your full EMI if you can afford it. It's a wonderful thing to do.
Will that also look good on my CIBIL score?
Oh, absolutely. I mean, CIBIL gets affected when the bank says to CIBIL that I have not got money from this person and this person is late more than 30 days. And that's where your reputation starts getting harmed in CIBIL situations. And it's only that bank that can fix it, nobody else.
Okay. So there's no good brownie points that I can earn for the CIBIL score. Moving on, we have a website query now. Dipankar Banerjee says that he is a salaried person. Now, his home loan installment amount is debited on the 25th of each month. His salary gets credited to his account on the 30th or the 31st of every month. Should he continue with the current cycle? Can he pay his installments on the first week of every month instead? that should be fixable, right?
Yeah, I mean, this is more like an operational convenience question, for Dipankar. See, my suggestion is this. It's perfectly okay. You can work with this arrangement. Your money comes by the 30th. Just that you will have to have far more discipline. And every time you are using your debit card or your ATM card, you will have to remember that by the 20th or 25th of the month, I need to have this much balance. Now, that is very difficult, and we don't have any technology which sort of allows you to set your own limits on your savings account. So as long as there is money in the savings account, the ATM will happily dispense money. The checks that you write will happily be honored. My suggestion, therefore, is if you can actually time your EMI just a couple of days after your salary comes in, that's brilliant, because what happens is it's a very important financial commitment, and it's generally, for most people, it's the largest expenditure in their entire monthly expenditure bill. So therefore, if your salary is coming on 31st, try and have your EMI be whisked away from your account on the 3rd or the 4th or the 5th of the month. In the same breath, I would also say if you have SIPs and other investment commitments, let them also happen within the first week of the month. So then whatever you are left with is your expenditure budget, and that way you never go over budget. You will spend within what you have. You will not be, in the urge of doing extravagant or impulsive purchases, and as a result of which not be able to create wealth as well as honor your commitments. So suggestion is just shift them a little behind your money credits in your bank account. I think that's a great operational efficiency to have.
So, continuing with the same theme that you just brought in of fiscal discipline and how we should ideally be paying off our home loan EMIs and the SIPs, etc. in the beginning of the month. Now, one always is told that you should at least have 3 months of worth of EMI in your bank account, in case of a rainy day.
Absolutely.
How do you get that money in place? Would you advise people to open a separate bank account and ensure that money sits over there, deposits the money in that account on a monthly basis?
Correct. Kavita, in fact, there's something better than opening a new bank account. What we are always talking is about a contingency fund. So that contingency fund not only comprises of 3 or 6 months of your EMI, depending on the nature of work and the kind of work. I mean, if you are a professional or a self-employed person, maybe 12 months is the budget that you need to have for. But it's not only your EMIs, it's your entire monthly expenditure, which is inclusive of your EMI. That much amount. So if your EMI is, for example, 30,000 and the monthly expenditure is 20,000, then your contingency fund should be 50,000 multiplied by 3 months or 6 months or 12 months, depending on which kind of background that you're from. Now, having said that, what will you do with this money? It will take some time to build up this money, but take this money and put it in a liquid fund. You have two advantages. You earn better rate than keeping it in a bank, which is giving you, say, 3 or 4% or 5%, versus that you'll get about 8 or 9%, which is the current rate. And at the same time, over a period of time, this will keep going on. Maybe once you cross 3 years and all that, the returns that you have got from this fund, be in the growth option, by the way, and the returns that you get from here will also start becoming tax-free. So it's a great way. Take the money, put it in a liquid fund or a short-term bond fund. There's hardly any risk. In fact, there is no risk. I mean, every day you're earning a little bit of, interest on that money. So it's a great way to build your contingency fund.
So there you are. You get answers not only to your home finance questions, you also get a little bit of financial planning over there. Email query next. Amrut says that he bought a home loan. He took a home loan of 21 lakh rupees. He wants suggestions of a few good policies for insuring his home loan. Now, he's looking for a low annual premium and preferably a no-frills policy. Kartik?
So, Amrut, you have already given the answer in your question. So, the policy which has no frills and which has got the annual premium, which has got the lowest premium, is what is known as a term plan. Suggest you take 2 or 3 term plans if that is convenient to you. I mean, 20 lakhs, 50 lakhs, depending on your loan. Here it is 21 lakhs. So maybe you take one policy of exactly 20 lakhs or 25 lakhs just to cover this loan. God forbid something happens to you, then you have this policy that your family members can use and pay off the loans. If the bank is insisting, you could even endorse this policy in their favor if at all this is required. And for your other life insurance needs, say you need a total life insurance cover of 50 lakhs, the other 30 lakhs could be a separate policy. Because once you finish off this loan, then your liability is gone. If your liability is gone, why would you want to keep flogging that policy and keep paying an additional premium for that if your financial requirement is itself met? So in that case, you can even choose to deliberately make that policy in a lapse status and let that policy go, but because your requirement is already taken care of as soon as you finish off your loan. So therefore, take a term policy equal to your loan and a separate policy to meet your other life insurance requirements.
Right, and a good thing to know, if the bank is selling you an insurance policy along with the loan, it is not mandatory for you to buy that insurance policy from the bank. You do have the right to go out and shop for a term plan, for an insurance policy that suits your pocket. Interesting question coming in on Twitter now, Kartik. Varun wants to know, what is the optimal tenure for a home loan?
Okay, this is a little tricky one to answer. Now, see, let me tell you this. If you took a 15-year loan, let us say the loan value was 1 crore. Then in 15 years' time, at an interest rate of approximately 9.5 to 10%, you are going to pay 1 crore in interest. Now, the EMI for that 1 crore loan is going to be approximately 1 lakh rupees. So now this optimal period changes for most people. What I have observed by experience is that if you suggest a tenure of say 8 years or 10 years, obviously the interest outgo is much lesser, but then there is enormous pressure on your monthly cash flow. If you start looking at 20 years and 25 years and 30 years, then the cash flow pressure is just marginally reduced. You're not getting additional benefit, but the interest that you're paying is almost double that of your original loan, which means it's way too much. So in my view, 12 years, 15 years is you can use that as a guideline or a rule of thumb as saying that that's the optimal amount of tenure that you want to have. And which is why once you have that 12 year or 15 year, no matter what happens, you don't let that tenure extend, because as soon as interest rates go up, the first thing the bank will do is give you the option of continuing with the same EMI and letting your tenure increase. But that's really detrimental to your financial health. So you don't do that. You in fact increase the EMI a wee bit and try and keep your tenure at the same level that it was, or even try and reduce it a little bit. But then this is something you need to keep assessing over a period of time, looking at your overall financial plan, figuring out what's the most optimal level of loan servicing budget that you should have out of your monthly inflows. As long as that is within about 30-35%, for the home loan, then I think you are in a very comfortable position. Look at that installment budget out of your overall income, and then maybe that will help you in coming to some sort of a guideline in terms of what's the best tenure.
So
but otherwise,
also,
12 to 15 years.
So Kartik, this is also age linked. Is this a function of your age, as in, what stage of your life you are in, whether you're in your 20s, your 30s, your 40s, your 50s?
Yeah, to a certain extent, yes. It becomes more applicable as one is nearing the age of 60, because most of the times the tenures sort of tend to get over by 60. What I mean to say is, if a 50-year-old person applies for a home loan, the bank will ordinarily insist him to only get a 10-year tenure and not anything more than 10 years, maybe at the most 12 years. They will not bank too much of reliance on his pension income and things like that. So it becomes relevant at a higher age, but otherwise, purely from principles of financial management, it doesn't depend on age.
Right. Moving on to a website query now. Vicky says that he and his wife are going to buy a property in Bengaluru. They plan on taking a loan from SBI or from Axis Bank. Now, he's checked his CIBIL score. It is 570, while his wife's score is 810. His wife will be the primary applicant for the home loan. Will his score affect the loan process? Will the bank deny the loan if he is a co-applicant?
Okay, what I can tell you for sure is that your loan quantum and your loan application will 110% suffer because of your 570 score. Now, whether you will get the loan or you will not get the loan depends upon why your score is at 570. Obviously, there is something wrong somewhere, either which is recent or which is, a blast from the past, something which is maybe 10 years ago, something went wrong, or something which is probably wrong 4 or 5 years ago, and you're still sort of trying to sort that out with an institution concerned. So why is your score? That why will determine the kind of deviation your loan officer wants to take. So if that why is really justified, and if the lending institution and the officer concerned, they feel that, look, you are a genuine person and it's actually not your fault because of which your score is 570. And this is very, very ordinary. Like I said, CIBIL is a robot. There's no way we can talk to CIBIL, right? CIBIL does what it wants. So therefore, if the loan officer thinks that it's a very, very genuine reason, then, your loan will not suffer. But otherwise, because of the reason by which you are at 570, your loan will suffer.
Right. Moving on, we have a question that's coming on Facebook now. Ankur says that he has received 45 lakh rupees from the sale of property. He also has a home loan of 36 lakh rupees on another 3 BHK property located in Ghaziabad. Now, this flat is ready for possession. He wants to know if it is a good idea to use the 45 lakh rupees that he's got from the sale of property to repay the home loan.
Okay. So firstly, if you can afford the loan, remember you're getting tax benefits also. It's helping you with your cash flows. It's not causing too much of pressure to you. Then please continue with the home loan. Imagine the options you have with the 45 lakh in your hand. Of course, you manage your capital gains. That's first. So you spend the amount of money to the extent that your capital gain tax liability becomes zero. But assuming that your capital gain is taken care of, see what 45 lakhs can do for you. So that's one part of the story. Your 36 lakh loan is costing you about 40,000 in terms of EMI. Even if you did the most conservative thing at 45 lakhs and put this money into a bank deposit or a short-term mutual fund which is going to earn you 9 or 10%, you will actually be paying out the entire EMI out of your interest earnings, pretty much, minus the taxation that you will be charged. That's one option. The other option is use your 45 lakhs, put it in equity mutual funds over a period of time, take a rule of thumb, use a rule of thumb, every 5 years your money will double. So just think about it. Maybe in about 5 or 10 years time, you will earn enough money to not only pay off the outstanding principal at that point of time, maybe 4 years or 6 years or 7 years down the line, but all the interest that you would have paid from now until those 6 or 7 years, you'll be able to reimburse yourself everything back out of this 45 lakhs. Thus, your property will become actually free of cost for you. So if you have this money, please don't try and go into a one-way street of, having loan is a bad thing to do. It's a big burden. Let me just clean it off immediately. Don't do that. Don't be in a rush. Try and create multiple assets. Your 45 lakhs is worth gold. Please don't squander it away by just, psychologically paying off your loan. It can help you in many ways.
Right. And like Kartik keeps saying, a loan is a good thing.
Yeah, home loan is a fantastic thing, yes.
Kartik, one important thing. Now, a loan, like you said, is a good thing. You are in fact creating an asset. That is, a home loan is a good thing.
True.
Let's be very clear over here.
Yeah.
But how much of your salary should actually go towards servicing a home loan?
See, my personal feel-good factor is about 30 to 35%. And you see, life is such that you will have certain other loans also from time to time. You might require a car loan or maybe a scooter loan or something or the other, or some temporary loan. It always happens that you need some loan or some sort of short-term loans, medium-term loans and all that. So therefore, under no circumstances, out of your total money, should more than 40 or maybe maximum, worst case scenario, 50% of your earnings go away in paying various EMIs. And within that, home is a very important thing. So try and, keep your home loan EMI within about 35% of your total income. So that way, you will, take care of your EMIs, plus you will have at least a 20-25% to save for the future, because that few savings that you will make will help you create so many more options in life as you sort of become 40s and 50s and come to your 60s and all of that. So that money will actually grow into a huge tree and which will help you, reap the fruits over time.
Right. So essentially, it's like good cholesterol and bad cholesterol. You need more of good cholesterol. So your home loan is a good loan, which is like good cholesterol. 35% of your income should ideally go towards paying your home loan EMI. The remaining 15%, like Kartik said, could go towards EMIs for your auto loans, your personal loans, which are like bad cholesterol. They are necessary, but
you can't help it sometimes.
They're necessary evil, but yeah, you can't help it. Email query next. Ravi Gopal says that he's been repaying a home loan for the past 2 years. Wants to know when would be a good time to close this home loan. He plans to repay it in the next 5 to 6 years. Should he wait for a longer time to avail the tax benefits? A lot of people are in a hurry to pay off the good loan.
Yeah, because psychologically as a society in India, we think that loan is a burden, and which it is. It is a burden if it is a personal loan, if it is an auto loan, because all these things are depreciating in value. So we tend to put even the home loan in the same box that, loan is a bad thing to have. But loan is leverage. Loan is something that fulfills dreams. Loans is something that helps you achieve so much more. It helps you multiply 3 times and 5 times. So therefore, when you take a loan to buy a house, remember your house is appreciating. Real estate in this country and for the next 10 or 20 years will continue to appreciate at least 12 to 15% in terms of capital value. Which means if your loan for that capital asset is at about 8 or 9 or 10%, you are making more in terms of growth vis-a-vis your loan. And your asset is, of course, perpetually appreciating. Not to mention, if you put it on rent, then you earn more in terms of rental income as well. So therefore, a home loan is a good idea, and one therefore should not be in a rush to pay off that one. Your other loans, perfectly logical to pay it off, credit card loans and all the other kind of loans which actually drain you out of your resources and which will actually be adverse to your financial prosperity. Those loans are definitely bad. Those are bad burdens to have, business loans, term loans and all of that. But home loan, please try and put that into a very unique separate basket of its own. It deserves that credibility.
Deserves that credibility. It is, like we said, good for you. And the tax incentives obviously don't hurt. Website query coming in now. Shukla says that he wants a home loan and the bank wants is his previous 6 month statement. All the money that he has been put into PF. Now his take home money is obviously less. So he asks, will the home loan amount be given on the basis of the take home salary or inclusive of the money in the PF?
Okay, so a lot of times now, this is also kind of unfortunate. A lot of people just follow the rule as it is given to them. And, as organizations grow, sometimes you might feel that people take a blinkered sort of view and they will only look at how much is your free cash flow and based on that they will decide. But, I want to give a little different perspective to this. So if you're putting money into Provident Fund on a voluntary basis, which is if you're putting money into VPF, why are you doing that? You're actually earning only 8% on that. You're not getting any tax benefit on that. You rather put that money into ELSS or other assets which are going to create more wealth for you. If you don't want to take risk, go to PPF. In some sense, the money is more liquid than a Provident Fund because the Provident Fund money will only come to you at your retirement. But instead of that, a PPF money will at least become open in 15 years time. Better than that is ELSS, which is, money is available to you in 3 years time. Or better than that is an open-ended mutual fund. You're creating so much of wealth. So why not look at it that way? That will also give you an enhanced possibility of getting an enhanced loan. So therefore, my suggestion to you is, because your cash flow is looking small, you don't want some banker to become biased on your cash flow. My suggestion is, at the earliest possibility, stop that additional contribution, that voluntary contribution that you're doing to Provident Fund, increase your cash flow. Obviously your chances of getting a loan will be much higher. But that is to say, take it with a pinch of salt. There could be some very, very smart and intelligent people also who will understand this and they will themselves give you this advice that stop doing additional Provident Fund. Maybe you can use that money to pay, your EMI and therefore get a slightly higher loan. So all options are available, but generally speaking, try and stop this because it's not a financially wise thing to do.
So essentially, Mr. Shukla, what you need to do is go back, look at your finances, look at how much you're saving, how much you're keeping aside, and re-engineer it a little bit. That's it on today's episode of Property Hotline. Kartik, thank you very much for coming in, answering all those questions. And if you have any questions related to real estate, like we keep telling you, IDs flashing on the screens, send them in. We'll get the country's top experts to answer every single question. That's a promise. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.